Well, that was a fun market open. Don't know if you were actually watching the stock market this morning, but I was. I think I saw the Nasdaq down over 1,000 points at one point this morning. I don't think the Nasdaq has ever been down 1,000 points in a day. Obviously, some of that's just statistical because for most of the Nasdaq's history, it hasn't been whatever it is, 15, 16,000, but still. Being down 6%, 1,000 points is quite a feat. Don't know if you saw Bitcoin, but Bitcoin was under 50 grand for a little bit this morning. So I thought we should just talk about what's going on. I know there's a lot of people out there who might be scared, might be nervous, might be asking what the heck is going on. One of the things that comes with age is experience. And maybe some of that experience could help because, we have certainly been here before. If you zoom out, from looking at just today or this morning, and you go back and look at what happened the last time we went into a recession, 2008, maybe 2001. If you zoom out and look at the 20-year chart, you can barely pick out where, the bear market was. And don't get me wrong, I think we're in one. I think there's certainly more pain ahead. I do think, we repeat a lot of the same psychology. This time it might be an AI bubble. Last time was a dotcom bubble. There's just a realization that, hey, if we are going into a recession, which I think started June or July, Danielle DiMartino Booth thinks it started in October. Even if it doesn't start till Q1, recession is coming, folks. The business cycle is real, and a recession is a natural part of that. And what happens when you go into a recession? You see a reevaluation of risk assets, and you're seeing that in a big way today, right? You're seeing a lot of fear, right? The VIX at one point this morning shot up to over 60. The VIX, or the fear index, had been, a teenager for a long time. So that certainly has caught people by attention. I think it'll be interesting. I don't know if you guys know about long-term capital management. I think that's what it was called. It was essentially a hedge fund that went bust and caused a lot of pain. And I wonder if there's a hedge fund or two that's getting caught in this carry trade unwind. And, I think, it'll be interesting to see where the dust settles. The other thing you got to remember is if you are a long-term investor, there's going to be some opportunities. Hopefully you have your shopping list. Hopefully, you have your dollar cost averaging, if that's what you are doing as an investor. But realize that recessions are, in my opinion, recessions are natural and opportunities to go shopping. If you look at my 25-year career, mainly in real estate, recessions are when you can get the best deals, right? You want to buy from somebody who doesn't want it. It's called a don't wanter. You want to buy perhaps with somebody who's going to be flexible either on price or on terms. And in a bull market, it's tough to get that. You have to overpay. You guys remember 2021. You had to overpay, waive conditions, waive appraisals. It's really hard to get a deal when that's what the market's doing. But when the market slows down, and if you've been on my channel, I think it's going to slow down quite a bit. I think we'll be below 4 million transactions for the second half, right? The second half of this year, as we get to the election. And then you add on top of that negative wealth effect, right? A recession. You got consumers that are scared, pissed off, nervous. It's a recipe for a recession. I know it feels scary in the moment. I know when you look at your stock portfolio or whatever, and you see it down, maybe double digits, it's frightening. I've been there. I lost 80% of my, 200 grand in the dot-com crash. So I say this with as much empathy as I can. But this too shall pass, right? So just realize that. I will highlight for you that what I learned after losing 80% of my stack is stocks weren't for me. And to put it in lingo today, stocks and crypto weren't for me. I had to get comfortable with hard assets, aka real estate. I wanted to see it, touch it. I wanted to be able to add value, right? Take a living room or a den and make a third bedroom, for example, was very common. I wanted to find ways to be better, than anyone else. So I had a buy box. I looked at the buy box every day. 30-year debt, right? You're not going to get margin. You don't get margin called on 30-year debt. It's fixed. Even if property prices fall, you don't get margin called on residential loans. So that was, the dot-com bust led me to real estate, and I'm happy it did. Frankly, I think I did the math one time. If I would have stayed in the stock market, I'd still be working. If you don't know, I retired 7 years ago now. I'd still be working. My stock portfolio would probably be, I don't know, 1.5, 1.7 million at this point, probably. But again, I sold it all and moved to real estate. But let's just say my net worth is a lot more than that, and the cash flow from it is what we live on. So I'm not mad at the dot-com crash. It was painful in the moment, but it led me to a new direction. Again, recessions are natural; they happen. Recessions on average are 8 to 12 months. Boom cycles are 8 to 10 years. So put that in some context. I chase cash flow, not appreciation. There's a lot of people out there talking about, hey, bet on appreciation, do this, do that. Negative cash flow is okay. I don't ever believe that. I think if you get into a recession and you have an alligator, right, negative cash flow, and you lose your job, or your wife or your significant other loses their job, you'll sell that negative cash flow and maybe let it get foreclosed because you got to conserve cash. Again, in real estate, I think you're paid to solve problems, right? Especially in a recession, time to get creative. I do think there's one part of the economy that will see a little mini boom is refinancing. I think if you're in the mortgage business, you've been struggling for quite a while. And what I would be doing, folks, if I was in the mortgage industry, I would be reaching out to every FHA and VA buyer that's purchased in the last 18 months, maybe 2 years, and offer up a VA or FHA streamline. Now, I'm not in the mortgage business, so I don't know if there's a seasoning period. Maybe there's a 12-month seasoning period. But again, I think FHA and VA streamlines are just going to explode, and they should, right? A streamline means no cost to the borrower. It is a relatively simple process. I don't even think you need an appraisal. But yeah, I mean, if you got a VA loan or FHA loan at, I don't know, 7.5, and you can get it down to 6.25 with basically no cost, why wouldn't you? I mean, so yeah, if I was in the mortgage business, I would be turning my VA or my marketing machine or whatever you have set up to just go ham on streamlines. I think what's going to happen with rates coming in or going down is you're going to see real estate investors, right? You and me, we're going to get into the market in a bigger way. Why? Because home buyers are scared. If you watch my channel for any length of time, I like to be a contrarian. I try to zig when everybody else is zagging. So I really do believe that homeowners, mom and pop buyers, or I should say homeowners, are going to pull back. They're scared. They see a crazy election cycle. They see the stock market down 1,000 points. They're living paycheck to paycheck. There's going to be like, honey, well, now's not the time. We're not going to buy, right? Now's not the time. But But us, the people that do the work, that have a buy box, that are a part of the school community, this is our time. I really do believe that in the next 6 months, my community will do more seller finance deals in the next 6 months than we've done in the last 2 years. I think my community will do more deals in the next 6 months than we've done in the last 2 years, right? Because you are writing disrespectful offers. We are not paying list price. We are getting 2% credits at closing. We are getting stuff fixed and repaired. We are doing great deals. And we know it's a numbers game. We know we got to follow up. We know all of those things. So I look forward to sending out a lot of black cards, gold cards, right? Golden tickets. Do I have any? Go ahead. Oh, they're in the closet, so I can't get it. But again, I think it's going to be a lot of fun. So again, folks, if you don't know what we do on our live stream, I just ramble for a little bit, but then we start taking questions. So if you want to put a comment over there, we will go top to bottom. Love to answer your questions. Any topic is fair game. If I don't know, I'll tell you. But yeah, I'd love to see what's going on. 2 more thoughts before we go to the comments. I want to give a shout out to the school community. Just spoke or texted with Anna Kelly. And I know there's a lot of stuff going on. So Anna Kelly and I are going to go live tomorrow at 8 a.m. in school. I just put the Zoom link in about 20 minutes ago. A lot of you love Anna, and I figure with the stock market going down, and she was in wealth management, and she and I invested through the dotcom crisis, I thought you might want to ask her some questions. So if you are in school, it will be 8 a.m. tomorrow morning, 8 a.m. Pacific, is our normal time. So we'll be live inside school. If you want me to ask her any question, let me know ahead of time if you can't make it. I know for some of you that's midday on the East Coast and it's tough. It'll also be available for replay. I will post it in school probably later tomorrow. It'll be available in school if you wanted to watch it on replay. This will only be for the school community. So again, if you want to get in there and talk with Anna tomorrow morning, 8 a.m. will be your time. Also give a shout out to Stacy, a school member who shared a great story of reading Rich Dad Poor Dad and starting her journey a couple of years ago in Indiana. I thought that was a wonderful story. So show Stacy some love. And then don't forget about the Vegas event. I've started selling tickets to the Vegas event. It will sell out. It sold out last year. It will sell out this year. Buy your tickets early. It'll sell out, and there's no more space. I'm selling all the tickets. There won't be any more space available. We're maxing out the community, or maxing out the event space. We're gonna put chairs everywhere, downstairs, upstairs, on the balcony. I'm gonna feed everybody this year. You're gonna get 6 hours of networking with just the amazing community, plus probably 6 or 7 speakers a day, right? Probably 8 on Saturday and 7 on Sunday, I think is what I'm shooting for. So hope to see you there. If you do come, don't forget to bring your books or your cards. We'll autograph them. We'll take pictures. I think the Vegas event was so good last year. It was so great to see folks that we've interacted with online. It's so good to be in a room where everybody's positive and doing the work. I've been to lots of events over the years, and there's nothing like a ORaaT event. So I hope to see you there. Tickets are on sale. They'll sell out soon. So with that said, let's see what people are talking about today. What kind of questions we got? I always go to the top and down. Good morning. Aloha. Major pain coming. Yeah, it's already actually, I wonder if is it? Let's see what it's doing right now. Let's check CNBC. Oh, still down. Oh, the Nasdaq's only down 450 points. It was down 1,000 earlier. Pretty funny. Good morning. You have mentioned you only buy properties that have current cash flow, not future cash flow. What is the minimum cash flow you accept? So let's break this down a little bit. I'll answer that question, but then I'll give the full story. So I would be very hard pressed to buy a property that produced less than $200 cash flow. But that's not what I think. That's not what I teach. That's not what I talk about. But what I try to figure out is what does the average property in my buy box produce, right? I try to turn all of my investments into a bond. It's all about yield. And why is that unique? Why is that important? Because when I buy an asset, I am taking cash out of my account and putting it in this thing for ideally forever. That's my hold time, right? Forever. I don't plan to sell anything. And I want to know how hard my money is working. And frankly, you don't know how hard your money is working if you have a cash flow number, right? $200. If you put, let's just do some math, right? Let's just do some math. What the heck? So $200 cash flow times 12 is 2,400. That's not too hard. But let's say for example, $200 a month, 2,400 a year, but you had to put 50 grand down payment, make ready, closing costs, right? You took 50 grand out of your money market account and you put it into the asset. The yield on that would be 4.8%. Okay. Let's say that's average. But let's say, for example, again, let's do 2,400. Actually, it's simple. So let's say you got $200 a month, 2,400 a year, but this time instead of 50 grand, it costs you 100 grand. Down payment, make ready, closing costs. You still have the same 200, but now your yield is 2.4%. So again, I don't think cash flow numbers can be distorted. And I mean, if you go the other way, you go from 50 grand to 25 grand, then your yield goes to 9.6%, I think, if I did that right. So again, I don't think cash flow numbers, I think yield. I want to know how hard my money is working. So that's how I look at it. Hopefully that helps. Yeah. Good morning. Do you think mortgage rates are going to continue to plummet? I certainly, the market certainly does. The market is, I think I saw this morning pricing in 6 rate cuts this year, or no, by January meeting. So I think there's 4 meetings, September, November, December, January. Yeah, 4 meetings. That's a lot of cuts in 4 meetings. Although the Fed takes the stairs up and the elevator down, I think the market's ahead of itself again. I think the market's been wrong about Powell for a long time. I do want to say that an emergency rate cut this week would be a disaster. I mean, what kind of signal would that send? I don't know what's his name, Jeremy Siegel. I don't know what he's doing, calling for a 75 basis point cut. Can you imagine? Can you imagine what an emergency 75 basis point cut would do to the market? Man, that would be bad. I can only imagine. Yeah. Pretty interesting. So I don't think that's coming. I do think now that a September rate cut will happen. I think it'll be a lot less than the market expects. Even Goldman Sachs and Citigroup are thinking 50 basis points at this point. So it's crazy. I already forgot the question. Oh, do you think mortgage rates will continue to plummet? I guess it depends on what you mean by plummet. What did they today? 6 something, 6.3-ish. I don't know. Here's I don't know. Let's see what you guys think. By January 1st, do you think mortgage rates will be above or below 6%? Let me know in the comments below. What do you think? So today is August 5th. So you got a little bit more than 4 months. Do you think mortgage rates will be above or below 6%? What do I think? What do I think? Let's see. We got a couple of folks say below. Some say same. Yeah, I'll take below. I'll go below, but I don't think below by a lot. Like when I look at the situation right now, I can't. You look at a rate cutting cycle, which I know is coming. When you look at mortgage, when you look at compression in spreads, it's coming. I mean, it's hard for me to see, man, I don't know, 5.8-ish, 5.9-ish. So yeah, I think we go below 6 by the end of the year, but I don't think we go way below. But that's just a guess. I really don't. I don't really think about mortgage rates that way. Maybe I should, but I don't. I just want to know what the cost of capital is today, and I make sure the deal works today. Because again, hopefully you guys have heard me say this before. I get 30-year money. I don't play the ARM game. I don't play the balloon game. I try not to. And I just make sure it cash flows today, because a 30-year fixed rate mortgage is a one-way bet. If rates go up, I win. I do nothing. If rates go down and they go down far enough, I refi. So I make sure all my deals cash flow today at today's cost of capital. I don't play the woulda, coulda, shoulda. Let's wait. Let's do an ARM. Let's bet the Fed's going to cut. I'll do a 5-1 ARM. Blah blah blah. Not the game I play. I want to make sure my asset cash flows today, and then I have the one-way bet. If rates get better, I refi. So that's how I think about rates. So I don't think I'd call that a plummet. I think we've seen a lot of drop already. Thoughts on manufactured home, on lease land? If I can make it cash flow, is it worth it? I don't own any of those. I've looked at them over the years. They don't finance the same way, I've been told. They don't age as well as stick built. But I know there's plenty of people that play in that space. So lots of investors make it work. I just don't have any experience. Why are commercial real estate stocks like CBD close to all-time highs? My guess is they look at refinances and extend and pretend. Blackstone, I don't know if you guys saw this, but Blackstone and KKR called the bottom in commercial real estate. So a lot of these companies are trading Class A stuff. Class A commercial real estate's trading again. I think the pain's coming to Class B and Class C. That's not where the big boys play. And again, Blackstone, Jonathan Gray, he's on my top 5 real estate investors. He called the bottom like 4 months ago, I think. So shout out to him. I think he's going to be right. Hey Kenny, how are you? Good morning. How do you know when it's time to reduce price on a flip? No offers, no foot traffic, no phone calls, negative feedback about something, the street, the upgrade. A lot of flips have hard money loans, so that gets really uncomfortable really fast. I will tell you, sometimes it's better to take a small loss than hold out hope. I remember a flipper in the 2008 crash in the Bay Area, so they were doing $1 million flips. He had this great empire going for, seemingly years, probably a decade. And I remember the house. He called me and he talked about having to take a $50K loss, his first loss ever. And he didn't know what to do. And he held out hope that he could get through it. And he didn't take the offer. So he rolled the dice and lost. Not only did he lose that home because no other offer came, he lost everything else. That $150K loss, which he could have stomached and probably survived, caused a cascading of pain that led to bankruptcy and divorce and all kinds of stuff. It was bad. Yeah, so sometimes taking a small L, buys time. Oh, somebody thinks above 6%. Could happen. Absolutely could happen. In contract right now using a lender, how do you approach falling rates? So again, I would go to the lender, and this is actually not my opinion. This is what I get from other lenders, like Jonathan at Convoy Home Loans. He told us this last week. What you should do is go to your lender and ask for a repricing. Many lenders will do one repricing for free. He said that, worst case, it'll be, hundreds of dollars to reprice. But if you have a good lender, just call them and ask for a repricing. Jonathan says his company gets that all the time. Yeah, go ask. That's what I would do. The Fed has been too restrictive for too long. I think that's a general feeling felt by many. How do you get 30-year money on a property more than 4 units? I use somebody called Velocity Mortgage. Velocity Mortgage is on my channel every Thursday, and they have a DSCR loan for apartments. That is 30-year fixed rate money. I have those. I have 30-year money on office buildings, on apartments, thanks to Velocity Mortgage. Traditional banks don't offer them, but again, I don't have to use traditional banks. So I called up Velocity Mortgage when rates are low, and I got 3.99 for 2 apartment buildings and 1 office building. 30-year fixed, 399, just crazy. So yeah, you certainly can do that. Contact lender and see if the float down policy or broker can flip to a new lender. Yeah. At the end of the day, folks, you need to be working with a professional lender, not just some schmuck or call center. Don't work with call centers, please. They don't have your best interest in mind. I strongly recommend, if you're in the residential space, you can use Matt the Mortgage Guy. He's on my channel twice a week. You can also flip to a new broker. Convoy talked about that yesterday or last week as well. I bring you 3 different lenders every week on my channel because it's that important, and they all do different things. So again, we have entire playlists. Matt the Mortgage Guy has an entire playlist on my channel that goes back years. So go watch that stuff. Will a 50 basis point cut in September save syndicators and multifamily? Absolutely not. Absolutely not. If you bought a syndication with bad debt, balloons, you're toast. The only question is when. The only thing that can help syndicators is extend and pretend. That's about the only thing they have left, is extend and pretend. And some of them are getting it. I've talked to some of them. They're doing cash management, and they're having to send monthly ledgers and all of those things. But no, the deals were stupid when they were closed, and all that equity's gone. It's just going to be so painful. I do believe there will be more money lost by individuals this time than last time. If you guys don't remember, there was a lot of pain in the Great Recession, but most of it was felt by banks. Why? Because the LTV was like 98 or 99%. There was almost no equity. This time there's 30, 35% equity, and all that's going to zero, or much of it. So yeah, the individual losses this time will dwarf the great financial crisis, in my opinion. My top 3 lenders are on my channel: Velocity Mortgage, Matt the Mortgage Guy, and Convoy Home Loans. I talk to them every week. They all have their own playlist. They all do their own things. It's no secret, guys. I bring on the people that I use. I've used all of them for their specific things. So I am not a hard guy to figure out. I bring on the people that I use. So there you go. Any other questions? What else is going on? Anybody else got some questions? Let's see what CNBC has out there. Oh, market's trying to bounce a little. Oh, look at that. The 10-year is unchanged. It was down like 3 basis points earlier. How about that? No questions? Oh, gold's down a little bit. Crypto fighting back. All right, well, if you guys don't have any questions, we'll just call this a stream. All right, again, folks, don't forget, join school. You have the opportunity to speak with Anna Kelly tomorrow at 8. Come to the Vegas event. You will get to meet all the millionaires, and you get to be around 400 other people that are doing the work. You want to be at this event. Trust me. You want to be around all these amazing people that are doing the work. They're all such warm go-givers. They'll talk to you. We will have name tags this year. My bad last year. Yeah. All right. So we got some questions. I bought some time. Look at our good friend Dion here. Dion talk. What is your biggest 2024 goal? My biggest goal for the year is I wanted to do something I've never done. I wanted to do something that seems a little scary. And my biggest goal for the year is to run a marathon. I've been training for it pretty hard for the last 5 weeks or so. Never done that. Never ran more than 13.1. I've done 5 or 6 halves. Never ran a marathon. Running a marathon for the first time when I'm over 50 seems kind of crazy. I'm not trying to set any personal times. I'd like to be under 5 hours, but I really don't care if I am or I'm not. I just want to finish. I'm going to try to do one crazy thing a year going forward. And that's on the personal side. I think on the ORaaT side is I want to be a top 100 school. Right now, I think ORaaT is like in the top 750. I want to be in the top 100. And to be in the top 100 school, it's not number of students, although that obviously helps. It's interactions. So one of the things that I'm starting to see is now that we're over 210 members is you guys need to introduce yourself. You need to ask questions. You need to congratulate other people. If we can get the community posts and interactions to increase, we will climb to a top 100 school. That's a big goal of mine. I hope we can get there this year, but I won't give up until we do. And then I would like to have 1,000 school students. That would be pretty cool. And again, we'll just keep doing what we're doing. We're giving away free education, free access. We got all kinds of replays now. I'm just so happy with the school community. I'm interviewing school students now. That's fun. Talked to Stacy. I talked to Jared last week. I think Kyle last week too. So school's my big focus. It's definitely my big focus. Do you think it's a good idea to pull all of your money out of stocks? I think sometimes when, questions like that, it's like you're asking a guy on the internet, that's no idea. That's a personal decision. I'm not touching that. I'm not touching that. I can tell you, anytime I got emotional with the stock market, it hurt me in the long run. But also I've admitted I'm not a stock investor. I don't have the mentality for it. So, you got to know who you are. There's a lot of people that follow me that are great stock market investors who will probably use this as an opportunity to dollar cost average. Good for them. It's just not my thing. I find the stability of real estate a lot more appealing. It takes time to sell, so you can't be emotional. So I'm not touching that. Hit the like button. Oh, you're so nice. When is and how do you buy tickets for the Vegas event? So you can go to Eventbrite. I'll maybe somebody can post the link. It's in some of my videos. It's February 15th and 16th in Las Vegas. And it sold out last year. You can go to my channel. I have a 3-minute video you can watch. It's pretty awesome. I watch it sometimes just to put a smile on my face. Eventbrite. I'll put the link below. But yeah. Very, very welcome. Oh, we've got a deal. Look at this. Looking at a 575 duplex in Spokane. Okay, I have about 50K down. Would it be smarter to get an equity partner for the rest, or pull the full 20% down? Keep full equity and have PMI. The only partner I have on any deals is Olivia. I don't like equity partners, frankly. I don't want somebody else's financial situation, motives, whatever to be. I don't want those problems. So what I might do in that situation, something you could do is go get the seller to carry back 10%. Why? I mean, why not? I mean, I did that. The third property we bought on Ferris. I had the seller carry back 10%. So if you're going to have a quote unquote partner, make it a debt partner, not an equity partner. So, hey, Mr. Seller, I'll give you $550 for your duplex. I'll put $50K down. You have a second position, $50K, and then I'll go get a first and not have PMI. So I might go ask the seller to carry back 10% or 15%. So go get creative, guys. I keep telling you, stop paying list price. Stop paying list price. Write disrespectful offers. Ask sellers to carry. You only need one. If you don't get that duplex, there will be another duplex or a triplex or a quad. I mean, go do what Dion did, right? Dion found a duplex listed for 500. He offered 400. And they countered. He offered 400. Then they countered. He offered 400. They countered. He did 400. And they took it. There you go. Good. Yeah. Awesome. You never know. I mean, let me be very clear. I never want a seller to take my first offer. My first offer is meant to get their attention. It's meant to get a reaction. It's meant to figure out what's important to them. If my first offer is accepted, I did something wrong. Yeah. Looking at a deal, 8 units, 2 separate buildings on 2 separate APNs, all units 315 for nice. What I would do in that situation is 2.1 million. Wow. Is that what that says? Yeah, asking 2.1. I would get those as residential loans. I would not finance those as commercial. Given there's 2 APNs, I would do 2 residential loans because I want 30-year fixed rate money. I want 30-year fixed rate money. 1820. How disrespectful should I get? Planning on pulling 500K out of my house. I don't know. There's so many details there. I don't know. I don't know how long it's been on the market. I don't know the debt structure of the seller. But let me just play with this for a little bit. Let's see. Where's my calculator? So you said 1820 is rent, and there's 8 of them. So if I did that right, your gross income full up is 14,560. If I did that right, assuming there's no laundry or extra income. What is that times 12? 74 divided by, let's say a 6 cap. 2.9. Let's see, let's try that again. I did that wrong. 1820 times 8 equals times 12 equals times, let's say expense ratio is 50%. 5 equals divided by 0.06. I don't know. Rough and tough, a 6 cap, again, assuming a 50% expense ratio is 1.45. 250 days on market. Seller non-issuance, seller financing, talking to, I don't know what that says about it since last week. I don't know about you, but I don't see any reason, unless you see a way to create value. And again, that's pro forma rent, or is that actual rent? Looking at a deal. So I don't know if that's actual rent or pro forma. I would only do my calculation on actual rent, not pro forma rent. But I mean, just rough math with a 50% expense ratio, I don't see why you would offer anything over 1.4. I don't know. But again, I don't know the market. I don't know this. I don't know. There's so many things I don't know. But yeah, I mean, 2.1 seems to be grossly overpriced. But again, I don't know the market or anything. So Yeah, it probably fell out because it didn't appraise, would be my guess. How many cards of each color will be sent out from now to the end of the year? That's a fun game to play. Let's play that game. My guess, so let's see, where are we? August 5th. So we have, so let's call it 120, let's call it 150 days left in the year, maybe. Let's hope we do 75 golden tickets and we do 250 black cards. That'd be cool. So that's 325 cards. I better go buy some more stamps. I need more stamps. I got that. Yep. Talking to Convoy, fun. Yeah, they're a good group on that. Still waiting on my last two golden tickets. Paul, send me a DM on Instagram or somewhere so I can send them. They must have gotten lost. I send them out every time if you ever get a card and you hear me on the daily financial news congratulate you, that's a sign that they got mailed, because I take them right from that and I stick them in the mailbox. So if I did that, I gave you a shout out on the daily financial news and they didn't show up, send me a note. I'll happily send them again. No problem. Oh, that's a good question. On TV, yeah, you're always seeing owner-occ rates. Is there a site for investors? It's not really, not that I know of. You'd have to call a broker. I always assume that investor loans are at least a quarter point higher, sometimes a half point higher. So I just ballpark it about a quarter point higher. Oh, look at that. Spoke to Stephen Dow this morning, going to do a 30-60-10 or a 40-50-10 on a fiveplex in Kansas City. Folks, hear me. Hear me. The 90% CLTV, combined loan to value loan, offered by Velocity Mortgage is the best Swiss Army knife loan I have ever seen. In a market where it is slowing down, where buyers are disappearing, your job is to find sellers that will entertain carrying a second, so that A, you can get in with less money, B, you could get a blended interest rate below market. Stephen Dow's, I still can't believe he offers the 90% CLTV, 30-year fixed rate, all the things. That loan product is nice. Nice. Remember to tell the stock guys out there that the market's still up 10%. Yep, zoom out. Yep, zoom out. Zoom out. Yeah, don't get emotional. That's my problem. Why wouldn't they offer that product in Minnesota? Again, maybe I don't know. I would ping him. I never heard. I don't know. Maybe he can't in Minnesota. Have you talked to him? I'd be shocked if they don't. My contact at Velocity Mortgage is Stephen Dow, SDAO at velocitymortgage.com. I think I can put it in the chat. Velocity Mortgage. There you go. I just look at that. I put in my own comment. Give him an email. Tell him I sent you. He's a nice guy. He's helped me a lot. 2024 goal is to go spend a few weeks with George Gammon in Turkey. Wow. Oh, that's fun. Nice. I didn't know he's in Turkey. I thought he was in Costa Rica I thought he was in Colombia. Did George Gammon leave Colombia? I thought he was in Medellin. I don't really follow George too much, but that's what I thought he was. I thought he was in Colombia. Looking to retire January 2025. Ooh, look at you. Is multifamily a total different animal than? Oh, yes, absolutely. Yeah. That was one of my greatest wake-up calls when we sold Norris Drive and bought Vassar, a little fiveplex. Way different game. You're more of a counselor, right? You can have a single family home, have a great tenant, never hear from them for years. You get a little 5, 10, or 20 unit building, you're going to hear from tenants every week. So-and-so parked in my spot. So-and-so's dog's barking. So-and-so's kids crying. There's so-and-so's fighting, blah, blah, blah. Yeah. If I could wave a magic wand, I'd own 35 single family homes and call it a day. Just done with it. Single family homes, call it simple. Yeah. Yeah. Oh, he's in Colombia, but doing a trip to Turkey. Oh, that's cool. Lots of Rebel Capitalist live streams to come. Fun. It's fun. Very, very cool. What's the downside of doing interest-only payments? You're not building equity. You're not paying down the debt. You're getting more cash flow. Usually, if you're doing interest-only, you also have a term. That's probably the biggest downside to me, is you got to refi or do something. You got a balloon payment at 5, 10 years usually. To each their own. I know some people that like interest-only payments. Just maximizes cash flow. Yeah. How do you integrate family into your business venture? Well, Olivia's been a day one ride or die. We talk about, during the journey, she ran the books, all of that. So I was lucky enough to have a partner in crime that, was in it to win it from day one. I will tell you that we did a horrible job of integrating our daughter. If you ever want to get your kids involved, I strongly recommend showing them the pretty, clean properties, not the disgusting roach-infested urine traps. Don't do that. That was bad. That was really stupid. Talk about money more. I think one of the things that we need to do is you need to talk about money more. Yeah, you need to talk about money more as a family. No idea. I can just tell you based on history, the last 2 times the Somme rule has been triggered, recession occurred. Recessions are not good for the stock market. Yeah. Why didn't you have a managed investment account? I don't trust anybody. It's a simple answer. I don't like the incentive program always seemed to be mixed. I didn't like that. Is there someone you can recommend to bounce numbers off? Well, you should join the school community and put the numbers there, and I bet you'd get dozens of replies. You got to get in the right rooms, in the right groups. School, I'm doing my best to make school that place. Oh, he can't provide in Minnesota. Oh, I had no idea. That's interesting. I wonder if it's a population thing or something. No idea. I'd ping him again. Maybe the rules changed. I have no idea. That's his thing, not mine. Starting the beginning with young kids, how would you balance working, acquiring rentals, and being present differently? I think the big thing that I would do differently is I'd talk about money more. I would talk about why we're doing things. Because when I think back to it, she knew I was gone, but she didn't know why. Also, I would talk about the good side. Value increase, rent, cash flow. You just got to talk more. You got to talk with the kids more. Yeah. Yeah. You got to talk more. Rates will come down, compression. Yeah, we'll see. My first rental property was bought when I was 30 years old. I was 30. It's in my book, One Rental at a Time. Where is it? Oh, it's over there. Never mind. My book's over there. Yeah. All right. I'm going to call this a stream. You guys have been amazing. Wow. 180 of you. You guys are rock stars. Only 55 thumbs up. I think we can do a little better. Remember, folks, recessions are natural. Recessions are opportunities. If you wanted to talk about deals, you want to brainstorm, join school. You'll get lots of people responding. And if you don't like it, stop. It's not a year-long commitment. It's $20 a month. I mean, it's less than the cost of 2 lattes. So join school. I'm there. Lots of millionaires are there. Hope to see all of you in Vegas. Vegas is going to be amazing. Yeah. Let's do one more question. If you were 59, what would your game plan be? Again, lots of variables I don't know, right? How much cash you have, equity, what's your profession, this, that, the other. 59. So my goal would be to get 4 rentals. My goals never change. I don't care if you're 20 or 59. Everybody should try to get 4 single family home rentals. Boring, cash flow day one, great yield. If you're 59, you're probably going to be alive in 25 years. Invest like it. Now, if I was 59 and I had, stage 4 cancer, I wouldn't worry about it. I would do something else. I would go enjoy life. But yeah, at the end of the day, if you think you're going to be alive in 25 years or 20 years or 15 years, go buy 4 rentals. That doesn't change. How much is school? It's $20 a month. $20 a month. That's what I would do. So again, the beauty of school, what I'm trying to do there is by making it $20 a month, all of the trolls don't show up because the trolls have no money. $20 a month is enough to keep the trolls away and keep all the go-givers, people that are doing the work, people that want to network. Dude, we have 2 accountability groups. I am not a part of any of them. We have an accountability group on Wednesday and one on Sunday. Probably as the group grows, we'll have more. Get in the right rooms. Introduce yourself. Don't be a wallflower. Just go. How do you know when it is right time to use other people's money as a beginner? My answer to that is when people offer it to you, right? Again, you got to document what you're doing. You got to be trustworthy. You have to show that you know what you're doing. I have never asked for $1 and I've raised 10 million bucks. That'll be 11 million bucks now. Never asked for $1. I just tell people what I'm doing. I show them what I'm doing. They go, wow, you're really good at that. Take my money. I've never asked for $1. Yeah. So there we go. All righty, guys, take care of yourself. Have a wonderful day. Join school. See you in Vegas. Later.